So GBPUSD from the 13th June, I was trying to long this pair, and it was a 50 retracement, and it still had potential to work, but my stop loss was too greedy and it stopped me out. So additionally, yeah, probably these two candles were my entry. I should be placing the stop loss at least on the size of a previous biggest candle, or a swing even down low there. And it was like, if I really got stopped, then it was like 9 pips, 10 pips stop loss. It was too small, way too small. Should be like this. So this trade should be like 1-to-1 risk reward ratio, and then it would actually work. Although it wasn't, it was far away from being a perfect fib. We had first impulse, second impulse, third impulse, and then this third impulse was very flattened. It was the perfect setup. But I get it. Why would I want to enter such position, given like you have to enter something because you trade for a prop firm. You have to deliver one trade every 10 days, and this is the rule. So let's talk about USD CAD. This one is structurally good. It's even a Elliott trade. So we have a first very small wave, second prolonged, third ABC correction, and then a bounce from below 61.8 again until a previous structure of this kind of head and shoulders, if you will, and then falling down again. So the reason the trades failed was a greedy tight stop loss in both cases. Second case was of course more dangerous. It was a late entry. This one was still a valid one, a good one. And I was thinking about where did this blue triangle came from, and from what I could see, it was when I flipped the Fibonacci measurement upside down. Then we have this 29.2 level, and it aligns perfectly with the blue triangle, which is painted here. So, but the better way to see that is simply look at the simple 61.8 and evaluate if it's perfectly aligned with 61.8 or somehow a little bit distorted. And in this case, distortion would mean high probability of not continuing the trend, but bouncing somewhere up and then continue to fall down, continue to create some kind of consolidation or even a slight bearish trend. In this case, it worked perfectly. So this is a nice one. And the triangles are just overcomplicating stuff. Okay, here we go again with GBPUSD. On 25th June, I was trying to short the market instead of longing it. That time I was longing it, perhaps. I thought, yeah, this time we had consolidation long enough, so we can long it. Of course, with the greedy approach. So last time was FOMO FIP 50, third Elliott impulse. So first, second, third. Consolidation around 29.2 or the second fib, tight stop loss, low confidence, rejection from second fib. So low confidence would probably justify this tight fib. And in this case, we had fib below smaller than 50. If we look at the normal picture, like the middle scale, breaking above previous market structure. What I mean by that is this market structure, this high, and so we can see that the price is confidently trading above shorting in a uptrend without proper retracement. So we should be waiting for a pullback just like there and try to enter long, but or eventually shorting it if there was a good enough market structure. Narrow focus, I would say. Was it narrow? What it was just hopeful trading, wishful trading that this is going to go lower. So if it was a pessimistic outlook on the market, I don't know, probably not. Probably just a hopeful wish that it's going to fall at least to the 50-ish levels. And so the volume, I'm sorry, the volume profile was P-shaped if you look at this in a narrow kind of way, which was actually suggesting some kind of pullback, but we should be waiting for the pullback and then long, not short it for all cost. So we can narrow our vision, and then we still have a very tight pullback, less than 50. So no matter how you look at this, yeah, if you look at this like that, then we have 61.8. But this would be not a very appropriate way to look at this kind of trade, because we are in a trending market and it suggests some kind of weakness actually. Instead, no, it wasn't a weakness because there was a lot of steam going on to push the market a little bit higher. We should be looking at the RSI instead. And the RSI told us that market makers are really trying to push this lower, but on the other hand, they were also accumulating positions at this level, and we actually had a nice fib on RSI, but a flat price there, which was divergence. It was a bullish divergence in this case because the price was, RSI was pushed downwards and the price stayed in the level, so leveled. So the price remained strong and it did not surrender to the pressure. We can make use of the volume function, measuring each candle. So we can see that price remained actually leveled, but the volume increased gradually. going lower, so there was a very high struggle to even push the price for this small retracement. So there was a high pressure to buy the markets. And I don't know what actually RSI is measuring. This is a kind of trading I would call a vibe trading, calling the top, tight stop loss, break even. Yeah, I was hoping somehow this is going to work, and it happened. So I predicted this time correctly that we're gonna fall, although there was no reference to that point. It was, oh, there was a reference, but no, it was a top. It could go way below that one. We had nothing. It was just vibe trading, and so it was a sequence of one, two, and three impulses. So it was a type of a Elliott combination. So A, B, and C. So it was actually a good trade, given that it was actually a third impulse and a correction, a pullback from a third impulse. So, and given that it was a very prolonged third impulse, it could go very well. So I was cutting the winner short. It's also a huge mistake. So if you see a candle like this, then you should actually remove the take profit and just trail the stop loss and let it run. Let it run until you are wrong, and until your stop loss gets hit. But this requires actually your attention, being present in front of computer, or actually, or at least looking from time to time at the screen. And so you can study the first impulse was a 50, second impulse was also a 50 with a wicks inside 61.8. So it's still a 50, and third impulse was less than 50 and very prolonged, very prolonged. You can actually see very strange behavior. So you could actually, like, seeing this kind of breakout over there, you could actually think, okay, we are breaking out of the structure, we are going high, we are going to the moon. And this is what happened. We had this small moon cycle, and then coming back. What's also important, it's also important to look at. Here we have the golden zone, and this golden zone was absolutely invalidated. We fold to the golden zone from a bigger move, from a bigger picture, from a like third scale fib, and then we use the 61.8 from a middle scale fib as a bounce point, and then price continued to fall to the C, closing the Elliott, ending the Elliott wave, entering some type of consolidation, and then breaking out from that and trading again high. USD JPY is very nice market. I really like this kind of market, but it doesn't give you this kind of building up Elliott all the time. You have to be patient and wait. And also it is like you can see here it is on some large scale. Like 13 days is nothing. I've seen Elliott lasting like 70 days. And this one has 22 days. It's very nice. And they are all a little bit more distorted. But you know, finding yourself in this, knowing where you actually are, this is the difficult part that comes in practice, with practice. So it was a vibe trading, calling the top. Another fatal trade from GBPUSD, and I can see some very important repetitive patterns over there while trying to counter trend in a bearish trend, trying to catch a reversal trade, a long. Well, we shouldn't be looking at this like that. That's why I marked this on the chart, so we should be flipping the chart. I haven't flipped it yet. Let's look. Why would I enter long in a bearish market, and how to prevent myself from doing it? Firstly, let's study this. We have a structure, a fib, which is a choppy fib, and it's clearly visible that the market is trying to reach higher levels, but it struggles. So it's absolutely not on point to think that this is going to like hold or bounce up. But additionally, what we should be looking at is the 61.8 and what it happened. We have on hourly, we have even one candle, one whole doji candle closing below 61.8, which is absolutely bad sign for a continuation of a like this pull, because this is a pullback. This is a pullback in a bearish market, and so hoping for continuation of this pullback is just acting counter trend. And still, I entered very early. I should be waiting a little bit more. Then I would probably see like, okay, but I wouldn't probably pay attention to that anyway. And I would wait for this candle, and at 11 in the night, so PM, I would enter and still get stopped out. So let's now do this properly. Let's flip the chart and let's see what actually is going on here. A very nasty market structure, consolidation. Not a good thing. We still have a choppy market, price falling below 61.8, but actually like gaining strength. And we like right now I can see that we have a pullback in a bullish market, and this pullback was exhausted. It struggled to reach lower areas, and then we are climbing up. And what would I be looking at here? I would be looking at longs, because I can see one fib there, 50, another fib, also 50. So the price is stacking to go up, but in this case it would be down. So it's very crucial and important to flip the charts. Okay, that's it. The video is over. Thank you for watching. See you in the next. So there was a trade on GBPCHF, and this trade wasn't somehow recorded. I'm going over all losing positions that I had on one broker, and I'm gonna have to switch to another broker because I don't have any more losing positions there. I'm just scanning the positions that were like doubled. I entered few lot size or few positions, and I'm reviewing them again. So this one is a, let's say, range trading. On a short, on a mid-term, it's a range trading, and on a short term, it's counter trend. Why? Because we had once 61.8 or 50 fib. This is a 50 because the wicks are not. The wicks doesn't count actually. And we hadn't had any kind of pullback there. I just entered wishful trading, tight stop loss. It would probably be 1-to-1 risk-reward ratio successful, but the stop loss was too tight anyway. So the market is merciful. It allows you to profit even if you are wrong. Look, if we made this 1-to-1, it would give us a win. Okay, but it was somewhere around this, so it was very tight. And like, okay, let's look. It was, let's flip the chart because the trend was slightly downwards. So let's flip the chart. Why would I so I wouldn't want to long it because there was no pause in the market. We had this kind of fib, which was actually a fib downwards. So in this case, in the upwards. So in a slightly bullish market or bearish market like this, we should also flip the chart and then look for like this tends to be a bearish market, but the price is somehow starting to consolidate, and this is a breakout trading. This is a breakout trading or consolidation trading, and then we should be looking at reverse chart and looking for a weakness to the bearish bias, and so we could actually expect it to flip or switch. But this wasn't my expertise back then. Let's take, for example, GBP CAD and trade from 20th October. On a smaller scale, there was a fib, and this was 61.8. On a mid scale, there was a fib, and it was less than 50. On a bigger scale, there was another fib, and this fib was also way below 50, and only and only short after we've seen the price action kind of dying here, losing steam with the first big move, then losing steam immediately, you can actually see from the candle, like it raised a RSI, but haven't crossed by any means the line of RSI, and so we are losing down steam, and then again the same, like, kind of consolidation, if you will, and then touching 50 firstly with the wick. So just to, you know, give the impression to the traders that, okay, we are touching 50 now, something drastic is going to happen, but nothing. Some traders would probably read this as a rising star or something in this kind, so longing from here, again losing, and then we have a 50 and trading above 61.8. So this was already sign of resignation in the market, and later we have tapped this 61.8 several more times, and so we traded below, even below the 1.85 over there. And the key to actually be profitable on this market was to already predict what's going to happen. I don't know, somewhere around here, probably, like seeing this candle and then resignation. You could probably since then know that we have a bearish market on GBP CAD, and you could know this for like several next several days at least. Then a consolidation, actually nothing happens, or a bearish market. So bearish market from there, so flipping the chart, and then we simply trade it as a bearish market. Well, this is actually strange. While, oh, we tapped 50, like this level. Probably it's more important that it was 61.8 from the previous fib than anything else. Because we don't have a fib right there. It's not a good fib. It's below 61.8. So I guess this is kind of trickiness of the market, and we have to get used to this. So we have to kind of have two biases at the same time in the brain. So or marking this level as something important even. So we could mark this level. Well, this was a round level on a grid, so it's kind of natural to look at this like that. So there is a significance of psychological price levels and ignoring it, but they are not always significant. We do have some reaction on them. You can see it on the grid actually, but if we we can add to the grid, but nothing drastical happens. Interesting to note on NZD/USD, we were there before, but I wanted to point out the fib. Like the immediate smallest fib was this one or this one. It was, I would say that the immediate smallest is this one, and this would be distorted 61.8. So already pointing out towards some destruction and confusion. This one would be like also below 61.8, and the mid fib, also the biggest fib we can get right now, is below 50. So again, not a perfect place to enter anything. So rather than enter and catching a fib, it was a greedy fib, although yeah, it wasn't that greedy, but it was a greedy entry, just taking what market gives, not actually thinking about this, but just you know, seeing the fib and reacting like in a inappropriate kind of way. So small failure to read market structure, small fib. The fib gives a lot of clues. So if you look at the fib and you pay attention to the details, you can say actually that it does make a difference. And then we had entry. We could enter from this areas, and then we should be able to profit quite nicely, considered as a small scalp or some small day trading, and actually a consolidation. So a consolidation with a additional confluence of this level with a POC. So it was something actually nice to look at. Let's look at this again. GBPTHF. There is a consolidation with a slight bearish bias, meaning you should flip the chart. So if I'm flipping the chart, then I'm seeing, okay, actually nice fibs forming. Here we have distorted fib, 61.8 distorted, and accordingly we have some consolidation. And going back to the levels of previous fib of the first one, but also something more important is a level 29.2 from the impulse, like reversed impulse, or the original impulse, the cause of this all consolidation, and there we have a reaction. So after that, we could of course measure the fib, that fib, because we are looking at this like that, and seeing that fib, this fib, what we see a distorted fib again. So this is not something that that should be in our interest. Therefore, we go back to the previous strategy, seeing that we have here a nice fib, there slightly better but a little bit distorted, and now we measure the right fib. It's also distorted, so expecting some imbalances, but they are actually being fulfilled. Bounce from 29.2, bounce back to 50, and then bounce off that level. Very tricky, actually, very tricky conditions. Not that obvious trading. Trading is not easy at all. Requires a lot of focus. And you see, if we wanted to Okay, if we wanted to along this further, then we have to we had to look at a move as a whole, and as this whole impulse, and measure that fib from this wicked move. Then we had 61.8, slightly above. So if we have such imbalances, then we can expect weird stuff happening. And so the weird stuff did happen. We came back into the fib zone from the previous move and struggled to break out again, revisiting the 61.8. So again, this fib was a very important one and a very wicked one. Not easy trading. Okay, it's on. So let's talk about GBP, a most current move. As I was analyzing my my entries, losing positions, I took the position on GBP USD while I was analyzing this, and then I noticed that I made some mistakes. So I haven't took the fib from a beginning, from the origin of this impulse. Instead, I was putting it somewhere there, as if this is not existent. And so I had 50 level. I entered a long, and this long was actually a little bit too confident for the 50, but I wasn't paying attention to that. And actually, it wasn't even 50. So many traders probably thought it was 50. It wasn't even 50. It was below. It was less than 50. Less than 50. Less than 50 on a bigger scale. On a middle scale, it was 50 or even 61.8. And on the smallest scale, it was a nice 61.8, but not that nice because the candle closed a little bit below 61.8. So it was a below or less, more than 61.8. It was actually nice structurally fib, and I entered there, and I noticed that we are actually bouncing from 29.2, and I noticed the similarities, and then it suddenly became obvious to me that we are dealing here with what I was talking about previously. So I my stop loss was something like that. I immediately escaped the position, accepting a smaller loss, and it was a good decision. And right now, as I see this, I think that we might actually have a good opportunity to enter a swing trading or a day trading, and I'm going to place this for a weekend if I manage before before market closing and before I get a confirmation. But I think that we're gonna bounce from a 50 level or from this level, so from the round price level. Let's just have this in mind. I think something around this area, and if I see a engulfing candle in the opposite direction, I'm gonna enter short, because the market is now switched to to bearish in my opinion. So therefore, on GU I should be looking now like this. The fib is distorted, even though we have here a right kind of fib, so 61.8. We have closed couple candles below, so it's dangerous to simply think we are going to the moon. The reaction to this channel should be something crucial. So see you in the next video, and I wish you a good weekend. Thank you for watching, and have fun with the charts.